What do you think could happen or will happen if the US as a nation is going to lose their reserve status?
Well, I think that's more of a process than an event. If you kind of point to when did the UK lose their reserve currency status, there's a couple milestones that were important, but none of them were like the day. And so there was a period of time where the US surpassed, the biggest economy in the world. Then Bretton Woods moment was obviously a huge moment, but the UK debt was still pretty widely held. Then there was the Suez crisis, where the
In this essential market update, we dive into the evolving global financial landscape. We'll explore the US dollar's shifting reserve status, highlighting recent data showing its declining share in global reserves amidst a move towards a multipolar world. We also examine the surging role of stablecoins, now with over $250 billion market cap, as a digital overlay transforming cross-border payments. Join us as we break down these critical trends impacting your financial future.
UK lost political clout, and then it's really been a long grind of losing it ever since. There's still a reserve currency, they're still in the top 5 of like held currencies, but not very much. And they've never had this kind of massive crisis because of it, but they've had a deterioration in their global standing and kind of the aftershocks of that. So I think that the US, by some metrics, we already hit peak US dominance, which is you can look at, say, US dollar share of global reserve assets. You can look at US share of global GDP. There's a couple of different metrics you can look at. Whether or not the US is the biggest trading partner with most countries in the world or not, we've lost that to China. And so I do think we are over our hump. We're over our peak. But I think there's this kind of like long tail that goes forward. In addition, people, when they think that, often assume that another currency has to replace the former currency. But historically, that really only happened like one time. For most of history, kind of modern history as we know it, gold was really the global reserve currency, and the other currencies were just these like overlays on top of that. They were instruments that were generally backed by gold or backed by silver in some cases, and it was whatever the kind of the country that was exploring the most, that was kind of this biggest growing economy, and therefore the most recognizable. And as they would kind of expand and then contract, and some other entity would take over, that would kind of displace them. But ultimately, it was gold for gold and silver for most of that history. We did have a handover where the UK went to the US as a global reserve currency, but people often assume that the US has to hand it over to someone else, like China or whatever the case may be. I make the argument that this period was an anomaly. This isn't something that's going to keep repeating. This kind of US dominance period was an anomaly. So after World War II, the US was over 40% of GDP. Most of the world was destroyed. The US had by far the most gold, biggest manufacturing base, really strong demographics, by far the biggest military. The homeland was mostly unscathed by the entire war. And so it was just like a hyperpower position. And so everything was kind of built on top of that. And over time, we've fallen from over 40% of GDP to 15 to 25%, depending on whether you're looking at nominal or purchasing power parity GDP. We're no longer the biggest trading partner. And so as you kind of go by different metrics, we've been shrinking. But there's really no other currency block that's going to recreate that 40% of GDP hyper dominant situation. And if anything, that's a healthy thing. That was an anomalous period where like most of the rest of the world was destroyed. And if you look at kind of long run history, like China and India used to be pretty big percentages of global GDP, stretching back a very long time. But in the era of kind of Western exploration and colonialism and stuff, they were on the wrong side of the technology war that happened. So they radically shrank as a percentage of global GDP despite their large populations. And if anything, the recent return of India and China to rather large chunks of global GDP is back to the normal state of affairs, given the size of their population and the long-standing history of their cultures. So I think we're entering a more multipolar world is kind of the punchline after that long ramble I just gave. We're entering a more multipolar world, which generally means two things. One, neutral reserve assets reassert themselves in the system. So the biggest one would be gold, but obviously Bitcoin's a newcomer with a lot of really attractive characteristics. And it also means, to the extent that fiat currencies are held as reserve assets, there could be more diffused holding of them. So rather than one being, say, 70% and like the next 4 making up the other 30%, you might have the top one be 40% or 50%, and the other 4 make up, the rest of that, or the other 9 top ones make up the rest of that. So you have a more diffused currency base.
The US dollar's peak dominance as a global reserve currency is gradually shifting towards a more multipolar world. Recent data shows its share in global foreign exchange reserves has declined to around 58% by late 2024, down from 65% a decade prior. This ongoing gradual process is driven by central banks diversifying their holdings, partly due to geopolitical considerations and increasing gold purchases, reflecting a move away from over-reliance on a single currency.
It depends what you mean by our society. I think they're a new way to get dollars, and so they matter for a lot of offshore places that want dollars. And if you think of kind of 2 main ways that dollars can get into a country, one is physical, ports of entry, which are highly surveilled and limited. And then there's through banks, which again, the government can determine what the official exchange rate is for all their kind of, cross-border bank transfers. They can determine whether customers in their country can even access dollars from their bank, should the bank have them available. And stable coins basically say, well, you can memorize a few words or write them down, and you can bring infinite value density through a port of entry. Or on a video call like this, someone can hold up a QR code or send a DM and transfer any amount of value. And so it's basically just a denser, faster way of getting dollars across borders in that type of market. And there is a demand for it because, again, there's different maturity levels of assets. So dollars are more like in the gold camp, where it's like an established, very liquid market. A lot of people have dollar-denominated assets. Dollar-denominated liabilities, and so they want dollar-denominated assets at least to kind of match those liabilities for a period of time. So I think that from like a global checking account standpoint, stablecoins are providing a real service to people. But that's just a different market than Bitcoin. That's a low volatility, gradual erosion of purchasing power type of market. Longer term, I think that Bitcoin is going to keep growing into the dollar system. It's just starting from a much smaller base.
We've seen in places where inflation was actually a big of a problem, right? So for those people downloading a decentralized or even centralized, what is worth wallet and transferring USDT, for example, Tether or whatever it is, USDC, is going to allow them to protect themselves from inflation. So, and at the same time, it's going to allow the dollar to expand the domination. So I think it's going to be one of those win-win situations. I'm foreseeing a lot of banks kind of started to embracing stable coins, not just in the US, but also in the UAE, where I'm based. I'm hearing things where banks are going to potentially allow users to start trading and transferring USDT, which will be super bullish, because then once you have a feed into the stablecoin universe, well, it's going to become easier to exchange your stablecoin for Bitcoin, for example.
I agree, and I think there's kind of 2 different levels of the technology. Basically, stablecoins are a digital overlay to the system that already exists, the dollar system. So it's just a faster way to move around dollars in many cases. Anyone that's sending like an international wire transfer, and like the time it takes, the expense it takes, the opaqueness during the process, the arbitrary ways it can get stopped, versus if you can agree with someone to just send stablecoins around, it's pretty useful. And for example, in Africa, there's like 40 plus currencies. In Latin America, there's like 30 plus currencies. Every one of those border friction points, they're all frictions. And so being able to just be a business that just kind of moves things around quicker with a sounder monetary unit makes a lot of sense. Whereas Bitcoin is a bottom-up challenger. It's a foundationally different unit. It's not an overlay on top of the existing central banking and fractional reserve and sovereign debt system. It's a bottom-up. It's basically the digital gold and by extension digital cash. And but that has to bootstrap a very long network effect. And there are people that they want to say buy something to protect purchasing power from, like you said, there's very high inflation in many places. They let's say they have 10% inflation a month. They don't want to have that degrade them, but Bitcoin can fall 10% in a month and more in many cases. And if they have kind of end of month liabilities, they're not necessarily wealthy. They can't withstand a 10, 20, 30% drawdown on their assets. And so they'll, dollars can suit that period of time where they need obligations to basically meet obligations over the next month or 3 months or 6 months. But once you get to the point where you can withstand more volatility and plan longer in the future, that's where scarcer assets with more appreciation potential make sense. So that's, gold and historically, or equities, real estate, art, and now I would say the apex one is Bitcoin.
Stablecoins function as a digital overlay to existing dollar systems, offering low volatility for short-term obligations, unlike Bitcoin's long-term appreciation focus. Recent data shows their market capitalization has surpassed $250 billion, with Tether, USDT, and USDC dominating. They are increasingly vital for efficient cross-border payments and remittances, significantly lowering fees and speeding up transfers compared to traditional methods. Stablecoins are gaining traction in B2B transactions and are seen as a key component for modern global finance, addressing inefficiencies and expanding financial access. If you found this explanation clear and helpful, we'd love for you to subscribe to our channel.